Hey everyone, thanks for joining me and welcome back. For those of you that don't know me, my name is Cory and I'm a top producing realtor here in London, Ontario. And today I want to chat with you a little bit about some recent news that came out basically directly from the federal government, or CMHC, which is a division of the federal government, making some predictions on what is going to happen in Canada's real estate market over the next 12 months. CMHC is actually the Canadian Mortgage Housing Corporation, and they're largely responsible for creating some policy around mortgages that they then pass on to lenders, whether it's the first-time homebuyer program or the stress test that we know so much about as well for first-time homebuyers. They are also the largest insurer of mortgages across Canada. So in the event that somebody defaults on their mortgage, the bank can then go to CMHC, who has insured that mortgage, and say, listen, they've defaulted on the mortgage, we want to collect our insurance. So the bank basically gets paid the full amount of what's owed on the mortgage, and that all lands with the federal government. So let's get to the interesting part where they actually made a prediction about the real estate market in Canada, and it's actually fairly dire.
CMHC is now forecasting a decline in average house prices in Canada of 9 to 18% in the coming 12 months.
So that's fairly severe. If we see that kind of drop all the way to 18%, that would basically bring us back to the values that we saw in 2018. So obviously we're aware of some of the economic circumstances where people are currently unemployed, and there's a significant amount of Canadians that are collecting EI or CERB or some sort of basically financial supplementation from the government. And at some point, that's probably going to end, or it's not going to be as significant. Not only that, we've also had a lot of Canadians, I think it's 1 in 8 Canadians actually have chosen to utilize some of the deferral programs that their lenders are offering, whether it's a deferral of mortgage payments, deferral of utilities. And again, that is something that cannot go on forever. At some point, you're going to have to start paying your mortgage again.
Just as governments are taking on more debt to finance the COVID-19 response, mortgage deferrals are adding to already historic levels of household indebtedness. A team, therefore, is at work within CMHC to help manage a growing debt deferral cliff, as we call it, that looms this fall when some unemployed people will have to start paying their mortgages again.
All of a sudden, Canadians are going to have to start making these payments again, and they've pushed things off, and they've kind of kicked this can down the road, which was meant to be a temporary measure until Canadians could go back to work. But in the event that Canadians cannot go back to work, we could begin to see Canadians start to default on their mortgages. Basically, since 2017 here in London and surrounding area, where there's never been enough supply to meet the current demand, which is why we've seen the prices increase. Well, if the opposite happens, then we're going to see prices decrease and head back the way that they came. If we see this spike in supply at some point in time that the demand cannot keep up with, then people will have to use the mechanism of reducing the value of their home in order to get it sold. And that's where they're probably making that prediction. And to me, to see a 9 to 18% reduction in the value of homes in a 12-month period, that seems pretty severe to me. What does that mean for the London and area real estate market? Again, not to kind of sound repetitive, but this is something that we have talked about in the past, where the London economy has a really strong base from the standpoint of a lot of its largest employers are government employers, and they continue to work. Not only that, we have quite a bit of diversity here. We have a lot of retirees who generally have a fairly stable income coming from other cities, selling out of their homes and retiring in London because of our hospital system here. So there's a lot of factors that are beneficial for London that I think could protect us from seeing the more severe end of that prediction, that 18% reduction in prices. So do we know how much we could see a reduction in prices? No, we don't. At this point in time, we have seen no reduction in prices at all. I think this could most negatively impact any of the first-time home buyers that have bought within the last year.
A first-time home buyer purchasing a $300,000 home with a 5% down payment stands to lose over $45,000 on their $15,000 investment if prices fall just 10%, which we are forecasting.
They now have a mortgage that is higher or cost them more than what the home is actually worth. So even if they tried to sell that house, they wouldn't have enough money to pay out that mortgage at the end of the day. That's the scenario that we saw in the States back in 2008, where people were what they called upside down on their mortgages. That's what that meant. I think we could see that happen for any first-time home buyer that has to sell. They could take a loss on their property. Here's what I would say to those people is you only recognize the loss if you actually sell the property. So if you have to absolutely sell, then you could be in that situation. I would say you are further ahead to try and keep that property and not recognize that loss. Rent it out if you have to, and go and rent somewhere else for a lot cheaper if that's the situation that you're in, but try and keep that property in whatever way or capacity that you can, so you don't have to recognize that loss. But that would be a fairly severe situation. I mean, things will need to change quite a bit here in London for us to begin to see those big spikes in supply and the values of our homes begin to drop that significantly. We know that CMHC is making a very, very bold prediction on what they think is going to happen in Canada's real estate market. Also keep in mind that Toronto and Vancouver a lot of times get wrapped up as Canada's real estate market, even though they're not the only real estate market in Canada. I think sometimes if you're in one of those markets, that's where perhaps you should be more concerned. But I think here in London for right now, we are pretty safe. And if any of that changes, obviously I will come back to you with another video. So that's it for me. Like I said, leave a comment down below, hit the like button if you've enjoyed this video or you found it insightful, and I would love to interact with you guys. Of course, I'll keep making more videos. Other than that, I hope you're all having a wonderful day. Take care.